Insurance basically is a good thing. It lets you protect yourself against very big and unexpected expenses. And basically it's like a swap. You exchange the situation where you might gamble against not having expenses at all in the best case, or having very huge expenses in the worst case. Imagine your house burning down. You swap this to a situation where in the best and in the worst case you have just a small predetermined amount of expense, which you actually pay to the insurance company. And the insurance companies, they accumulate the customers, accumulate all these bad events from all the people, all this crowd, and just split the risk, plus add additional payment for service of this splitting the risk and splitting this expenses. Now, what kind of insurances there are? First of all, there's car insurance. Whenever you will buy a new car through leasing, the bank will just ask you to insure your car. Not only, which is mandatory, just insure your responsibility against the other drivers, but also to insure your own car in case you just run off the road or just will get the car stolen. Next one is the homeowners or renters insurance. That's two different things. Then there's health insurance, which is a super big issue and super big thing in US and nearly non-existent in Europe. Then there are three insurances: the life insurance, disability insurance, and long-term care insurance, which I find pretty controversial, and I will explain later on. Then there's disaster insurance. If you live in an area with big tsunamis or earthquakes, you might insure not simply your home, but simply against such an event. Then there's travel insurance, which is also quite popular when you're traveling to a foreign country and you might have, in most cases, some of the healthcare related issues, and many more. So what you need to know when reading an insurance policy. First thing, it's a premium. So premium, that's how the insurance companies call the payment for the service. That's, as I spoke before, that's the payment for the split of all the expenses between all this crowd, between all the customers, just splitting the expenses that they have, and also charging additionally for the service of insuring you, for the splitting of these expenses. So, and basically I would say insurance in general is a really good service if the margins of the insurance companies are not huge. Now, next thing is the coverage limits, and I think that it's most common mistake is not fully understanding the coverage limits and thinking that there's none of the coverage limits. For example, if I would smash into another car, no problem, I have insurance, it would pay for fixing your car. It would, but usually there is a coverage limit. For example, not more than $50,000 or euros. And this means that if you smashed into a high-class Mercedes or Lamborghini or Ferrari, you will need to pay out of your pocket maybe 100,000 more. So there's always a coverage limit, always. If you even your healthcare, if you are insured in US, which again, as I said, is super complex and big market for healthcare insurance in US, you won't have the fully covered healthcare insurance. If you'll have some super crazy operation with the most expensive doctors, probably insurance company won't pay fully that one, because there would be a coverage limit. So coverage limits always exist, they just cannot be unlimited. Then there are deductibles. Deductibles is the amount that you pay out of the pocket of your own money before the insurance policy kicks in. and the insurance company starts paying those invoices. Then there are exclusions. Again, there are a lot of exclusions in all the insurance policies. For example, if we're talking about like car insurance, if you would be driving drunk and you would smash into some other car, doesn't matter that you have insurance. Just it doesn't matter. You would need to pay everything by yourself, because that's the exclusion. You are not allowed to drive while being drunk, or just for example, to drive very, very dangerously, which is automatically understood as just too dangerous thing to do. Finally, there are force majeure, when the insurance policies they don't work. Everybody is saying that such an event, for example, event of war, something like terrible as a war happened, and nobody cares that you had an insurance and your house just got run down. So whenever you shop around, whenever you try to compare to different insurance company offers, don't stop only on the comparison of the premiums, of the actual cost of the insurance, the one that you need to pay. There's always much more nuances here. Check the coverage limits, deductibles, exclusions, and then you would understand and try to wait which one is actually more cheap. The one that has a smaller premium, or the one that has a little bit bigger premium but way bigger coverage limits and way smaller deductibles.